Boom. Come on, Naeem. No, Naeem, I'm not sending him back. They're staying with me here in the U.S. No more Bangladeshi honeys for you, Naeem. Zero. You will have none. There are none left for you. Bumbleclot. All right, gentlemen. We just had a fantastic little TA session with the gentlemen inside of the private Discord. Went over charts, showed them, fib levels, how to draw supply, demand, teaching them different indicators that I'm using to watch the markets, how I'm making decisions, etc. Beautiful. We had a nice crew there in the Discord. So for those of you that are already inside the Discord, that's what you're missing out on. We're doing TA sessions. We're doing e-com sessions, teaching you how to build stores, teaching you how to be profitable in stores. I'm showing guys how to make money off of longing, shorting positions, how to position for the bull run, how to position for the bear market, what I'm buying, what I'm selling, why am I doing it, etc. We literally did a live video call in the Discord, just going over charts, teaching them the different indicators, those things that you guys see me do on stream, that you probably have no idea what the indicator is or how to use it. That's what I'm teaching inside the Discord. So if you're not already a part of the network, what are you doing? What are you doing? Do you not like making money? You don't enjoy that? I love making money. I make so much money that I hate that. I make so much money, yet I want to make more money because it's not enough money. You understand what I'm saying? Other people, they think, oh, I'm going to make, $4 or $5 grand a month. It's like pretty good. I can pay my bills, maybe put a little bit aside in the savings account. I'm living good. Fuck no. If I'm not making at least 10 grand a week, I'm not happy. At least. And that's not even a lot, right? People think, oh, if I could make 10 grand a month, life would be great. You realize that 10 grand a month is only $120,000 a year. That's nothing. Okay, this is not to talk shit. I'm just letting you know that's nothing. If you told somebody right now, so many people out there, if you told them right now, hey, you're going to make $10,000 a month into your bank account every single month, would you be happy with that? Oh, yeah, man, that'd be sick. And then I think to myself, 120 grand a year and you're hyped up, you got to change the way that you think about money. You got to change your perception of your own value so that you can make more money. If you really think you're worth 10 grand a month, you're never going to be rich. You're never going to make a lot of money trading. You're never going to be able to build a network, build a bit. Because 10 grand a month. Bruv, I know 20-year-olds who make 10 grand a week. Okay? It's not a lot of money. And once you start to understand this, the more willing, the more able you are to make more money. Because now you don't think it's a lot. If you think it's a lot of money, you're not going to make more than that. You understand what I'm saying? Because once you decide it's enough, once you're impressed by it, once you enjoy it and say, oh man, that's nice, your mindset's going to go from scarcity and trying to build up to a certain income to quickly turning into oh, how do I maintain this income? And you go into defense mode. And now you start trying to worry about, well, how do I never lose this income again? As opposed to having the mindset you had before, which is, how do I make this much money? How do I make more money? How do I make that much money? You always have to stay in a perpetual state of scarcity of, oh, I need to make more. You can never look at it and say, oh, I'm good here. Let me just try to maintain. Because once you go into defense mode, you lose. You stop doing all the things that got you to that income level. That's the biggest mistake people will make once they start making a little bit of money. So if you're not growing, you're dying. It's a business. It's something my mentor taught me when I first got into business years ago. One of the first things he told me, if you're not growing, you're dying. If you're not growing, you're dying. There's no in between. There's no stagnant. There's no maintaining. No. If you're not growing, you're dying. It can never be enough. It can never be enough money. It can never be enough investing. It can never be enough success, enough winning. There's never enough. Because once it becomes enough, you start dying quickly. You die quickly. So, anyways, let's get into markets, huh? A lot to digest here because it has been a super emotional week for people. People are capitulating. They don't know what's happening with the markets. They're getting mad at the tariffs. They're getting mad at Trump. They're getting mad at very emotional week in markets. And I get it because there's a lot of headline risk. And there's a lot of pumping and dumping based off of headlines, and that destroys people mentally because it's too volatile, the price action. And so people start doing things out of emotion, making moves out of emotion, and then they start rethinking or regretting the decisions they made, and it becomes a very difficult environment for people to trade in. This is what I was talking about inside of the Discord is when you are in an environment where we have a black swan taking place right before our eyes, because yes, that is what's happening. Nobody had a tariff trade war with China destroying equity markets, destroying crypto markets on their bingo card. Nobody was expecting that. You can't plan for that. That's not something that you can position for. So nobody should be kicking themselves in the back for that. Nobody should be beating themselves up over that. That's not something you can plan for. You can't plan for a COVID unless you're an insider who knows COVID's happening, like those in Congress and the people that are talking. Besides the point, you can't plan for a black swan. So you can't beat yourself up for not being positioned optimally for something like that to take place. So don't beat yourself up over it. Okay. Black swan's a black swan. It is what it is. Everybody lost money on the way down with this thing, unless you were doing nice hedges, shorting the way down, etc. So the point I'm making is when you get in an environment where we're at right now, where we have a ton of headline risk, tariffs are changing every single day. Nobody knows if we're in a trade war with China, with this country, that country, 90-day pause on tariffs now with all other countries except for China. So we get that big pump yesterday. We completely retraced the pump already, which I knew was going to happen. So your best move is to sit on your hands. If you're not a person trying to scalp, just sit on your hands. Okay. Sit on your hands or follow somebody like myself inside the Discord where I'll tell you what I'm doing and you can follow those plays and just trust that in the long term, you're going to be profitable. Okay. That's your best play because you're not going to be able to trade in an environment like this. There's too much headline risk. One thing drops from the White House, boom, price is up 10%, like you saw yesterday. Then what happens today? Retrace the whole pump. It's just too volatile. So you don't trade in these environments. You can't swing. You shouldn't be repositioning every single day or every single week in this kind of environment. You got to sit on your hands and say, what's the smartest thing to do? Okay. What I'm seeing personally is you're on a very thin line right now with markets. Very razor thin line. Okay. This is the reality. We have to be honest with ourselves. If we lose any more levels on the SPX, on Bitcoin, on ETH, it's cooked. It's cooked. It's the reality. It's cooked in terms of we're heading into much lower prices, and we're probably going to be in a bear market for some time unless we get some drastic monetary policy changes, which is also possible this year. We'll look at the percentage chance for interest rate cuts. But it's there. We're at that level. We start losing any more, we're looking at much lower prices. We got to look to scoop down even lower, which is great. If you got capital on the sidelines, you're still making money because bang, now you're going to get fucking generational entries. It's always going to go back up eventually. So that's not the issue. It's just, are we reversing now or are we going to see much lower prices? Are we going to see $1,000 ETH? Are we going to see $65,000, $64,000 Bitcoin? We're right there. And I'm going to show you guys what I'm seeing. Okay. So let me pull up the charts. Do a little Mr. Producer. We got all them hoes. Oh yeah, let me do. Yeah, let's do charts first, and I'll look at a little bit of macro with you animals. All right, let me update this chart for interest rates from the Fed, Mr. Jerome Powell. 1, 2, 3, 4. Yeah, they're still pricing in 4 interest rate cuts this year. Okay, we'll see. All right, so let me do a little Mr. Producer. Look at that. Already double-digit live viewers across all platforms. Easy, of course. All right, so this was something I was looking at with the gentleman inside the Discord. I was teaching him some stuff about fibs, but that's not for you guys. Let's look at SPX, okay? Look at this. Look at this. What did I say? I mean, I was saying this inside of our Discord, so obviously you guys didn't know, but I said this inside the Discord. So for the gentlemen that are watching that are in the Discord, this is what I was talking about, okay? So yesterday, we get this massive move back to the upside on the S&P. And you see how beautifully these supply and demand levels are playing. I had these drawn out for weeks now. They keep playing perfectly. So these are great opportunities to long, short, etc. Make money off of this volatility, which if you're a competent trader, you are making money off of this volatility, which is nice. But look at this, okay? So we get the news yesterday from the White House. This is why you have to be very careful in trading in these markets and not allow your emotions to get to you. On Monday, it's over. SPX wicks down to 4,900. What is that? Fucking $4,800. Okay, you wick down to 4,800. It's all over. Okay, you basically front run this demand zone that I had drawn out right here. Okay, I would actually draw it a little bit tighter to about right there. Yeah. Okay. You front run this demand zone, which is the previous all-time highs from last cycle, okay, 2021. Last all-time highs for SPX last cycle before a bear market. Okay, you front run that level. It's all over on Monday. It's all over. Trade war, China, blah, blah, blah. Okay. Next day, look. So this is Monday. You come just in one day, you're at 4,800 and you pump all the way up to 5,200. Huge swing. Next day opens, okay? You open up here at 5,200, nuke all the way down to 4,900, close at 41,981. Okay, so this is Tuesday. It's over. It's all over. Yesterday, on Wednesday, we get the news, 90-day pause on all tariffs except for China. What happens? Everybody's emotional. Everybody's excited. Everybody thinks we're back. We're so back. We're so back. You have this massive green candle, and we close at 5,500. We're so back. We're so back. We're so back. What did I think was going to happen? At the very least, we're going to retrace the majority of this pump. Maybe it is a bottom. Maybe we do start moving up higher. It's possible, and I'm hoping that is the case. But I just knew that this was going to retrace. Okay, all the pumps that we've been getting off of news have retraced in the past couple of months. So I figured, okay, well, if every other pump from the inauguration pump, the election pump, the election pump sustained for a couple weeks, so it was pretty quick actually after that we had come back down. But every news event that we've had where we've pumped off of has become completely retraced, and we've traded down lower later. So this is a news pump, not just a market environment changing, monetary policy changing, actual liquidity conditions changing. You know, the underpinnings of the market haven't changed. It was just a strictly news-driven pump. Well, what happens with news-driven pumps? They retrace. So here you go. You get basically almost a complete retrace, okay? So my point is you don't want to be super emotional on a very low time frame because – you know, this is one day. If you sold down here and then you see this pump up back up here, what people will do is, you know, sell here. Holy shit, we just pumped again. Buy back up in here. They buy back up in here. Holy shit, we just retraced the whole pump. Fuck, let me sell back down in here. And then you're back up here. And then you buy back. You just completely chop yourself to bits. The best strategy is the one that I'm talking about inside the Discord, so I'm not going to tell you. But the idea is you just don't want to overtrade. You got to make a decision, stick with that decision, get more clarity in the markets. Okay, now what's the game plan? What are we going to do from here? What are my levels that we have to reclaim for me to be bullish again? What are the levels we have to lose for me to continue to be bearish? Okay? And so you see that happening. So we got the retrace. There it is. Okay? So, you know, don't stress it. It's just news. We got to find out what's actually going on with China. Okay? Now, could this be the bottom on the S&P? Absolutely. Could be. Could it also not be the bottom? Absolutely. For sure. Okay. We could do something very easily like this. Or come back down in here. Maybe a little smaller bounce like this into this demand zone. So here's what I'm thinking. Because this is the previous all-time high from last cycle. Okay. You got kind of two things I'm looking at. Do we hold this demand and do we start consolidating over here until we get resolution on the trade war? if you do start getting consolidation up between this demand and this supply zone where we've been rejecting and bouncing up off of, I'm getting very bullish again because rate cuts are coming. Monetary policy is going to change like that. Bullish. Cool. We'll resolve the tariff issue. Bullish, because what else would be the reason for downside? It's just tariffs right now. So if you get rid of the tariff situation, okay, we can get bullish again. But we need to see price hold up in here. Then I can start to get bullish again. If we start to lose this demand zone, which we almost did right here on this potentially this was the capitulation right here, the low. If we start to lose this demand and we start consolidating or breaking down to here, then I would be looking to scoop up in this region, okay, in this demand zone. And that's what I'm looking at. So we'll see if we lose it or if we start to consolidate, we can get bullish again. That's what I'm looking for, okay? But I'm not going to get super emotional about these massive pumps and dumps off of news because I know that they're going to be short-lived. Look, I mean, we're going to lose this whole pump, okay? So that's what I'm looking at. I'm looking for confirmation from the market as to whether or not we're going higher or lower based off of this tariff news. On Bitcoin, okay? So here's where we got to be very careful on Bitcoin, okay? I'm telling you, we are at the extremes of where we could... Look. This is an issue right here, okay? So here's your bull market trend line on Bitcoin, okay? So we leave the bear market reaccumulation range. Here's our low, and this is when the bull market started on Bitcoin, okay? So again, this is just what I'm looking at. I'm just looking at levels, what makes sense, what doesn't make sense. What are we doing here? So we go into this bear market trend line, okay? Every time we wick down on it, we pump back up. Cool. All right. So we come back down. We retest this trend line. What happens here? We'll go on a lower time frame. Look at this. Look at this. Okay. We're just looking at levels here. All right. So here's their bull market trend line. Okay. This is a very important trend line. Okay. Tag it. Tag it. We're saved. We're good. We're good. Tag it. We're saved. We're good. We're good. What happened here? This is what I'm looking at. This is why I make the decisions I've been making. Okay. Got to be honest with ourselves. Confluence. What happened here? We lose the trend line and we get a what? A capitulation. Nuke. Nuke. This is on the daily. We can even look at it on like the 6 hour. All right. We lose the trend line. This is a major trend line. This is a bull market trend line from back in 2023. We lose it and we nuke hard off of it. Nuked hard. Look at what happened here. Okay. Look what happened here. We closed below it. And now we're nuking off of it again. Okay. That's not good. That's not good. Okay. So if we look at this from a completely unbiased probability perspective, okay, it could be one of two things. I'm just looking at the chat real quick. Jwork said it's making lower highs, but it doesn't necessarily mean a reversal, question mark. It still has not broke previous low. Correct. So you got to protect these lows. If we're going to get a reversal here, you cannot continue to make lower lows than this. And this is what I was talking about, that razor thin line that we're at right now with markets, where I'm still optimistic bullishly because of the tariffs and what's going on with tariffs. But I'm looking at this as this is not good, okay? Because the reality is we did just reject perfectly. I mean, this is not, I've had this, you guys saw me do it. Look, all I did with the trend line was unhide it. All I did was click that. I've had this trend line drawn for a week plus now, okay? So way before this price action took place. All I did was boom, right? I didn't even move it, didn't massage it, nothing. This trend line is clearly being respected. And what did we clearly do here? We rejected off of the trend line. We created a lower high. I mean, lower low, lower high. I mean, it's pretty obvious, right? Right? So, you know, you made this low. You're moving back up. You made a lower high here. Lower low, lower high. But then you made a higher high, but off the news pump. But then you reject it again. Okay? That's not good. We have to get back up above this trend line for me to be optimistic again, which again, it is possible. We just need a quick reclaim. We need a reclaim of this level right here. And so here's how I would draw this. Look at all this consolidation, all this price action right in here. Here's how I would draw this. Right at the top of these. Something like that. This is your overhead supply on Bitcoin. Okay. Okay. Very clear supply zone here. Okay. We came up into the supply. We lost it again. We have to hold these lows. We have to protect these lows, and we have to start grinding back up through this supply zone. And we have to reclaim this trend line. Okay. On the reclaim of that trend line, I'm bullish again. Okay. On the reclaim of that trend line, I'm bullish again. Okay. But I need to see it. I need to see this trend line get reclaimed because this is the first time in the entire bull market that we've lost this trend line. Okay. So that's something I have to be cognizant of. That's something I have to pay attention to because it is the first time that it's happened where we rejected off of it perfectly. Okay. So here's our supply region. We got to get up ahead of this cluster of price action right here. Okay. So we'll see. We just need to hold these lows. You can't keep breaking down and losing these lows again. Otherwise, you're cooked. Okay? So there's still life. We haven't lost these lows, right? So we got, potential double bottom here. Okay, still life, but we got to come up like this and then reclaim. And then on the reclaim of this trend line, the retest of this trend line, that's where I'm saying, okay, boom. If you're not already positioned, I'm getting back into the market on this trend line. If you get the retest, right? Because right now it was support, turned into resistance. We need to reclaim it, turn it back into support off the pullback, pull back into this region, bang. And we're going back up higher, okay? So that's what I'm looking at on Bitcoin. Pretty simple. We can't lose these lows. If you lose these lows, I think we go lower. If you lose these lows, right here, you're coming back down into the infamous range of death, which is so I want it the range. So you're going to come back down. Yeah. I mean, that's the thing, though. This is the previous all-time high support. It could be the bottom. I mean, it could be if we get back up into this because we've front-run the previous all-time high before and sent in the past on Bitcoin. So this was the previous all-time high, right? So we front-ran a little bit. Let me show you somewhere else, another place where that's happened before. I believe it was here. It wasn't a previous all-time high, but it was an area where you front ran the perfect retest. So look at this. I'm going to show you both cases. So here would have been the perfect retest on Bitcoin in the bear market. People were waiting for this retest during the bear market. So you get this one last capitulation right here. And people were waiting for the retest of this high for that perfect entry at about 13.8 thousand, but they never got it. The lows were right here. Okay. So the optimistic view would be this right here, this front run of this high, the perfect retest. Your hope is that that's what happened right here. You had a front run of this high, this perfect retest. You front ran it. and then you're reversing up higher. Okay, so that's the optimistic view, right? That you front ran it, we're bottoming. That's literally the Pico low. That literally might be the low, which is great. The issue is that we rejected off this trend line. Okay. Yeah, so you can base supply on sideways movement in the price. Yeah, so supply I'm looking at as where was there a clear supply level, right? Supply just means that there was more supply than there was demand, so then the price went lower. Because if you have more supply than demand, you lose price. So where you can see obvious levels of supply building up is where you see a lot of sideways price action. So like consolidation, where it's in what's it called? Consolidation is just a non-consensus on price, or excuse me, it's that consolidation is basically saying we can't decide if price can go higher or lower. There's just enough sellers as there are buyers until you finally lose that level. And if you lose the level, then that means it's a supply zone because there was more supply. That's why you lost the level. If it would have consolidated down here and then we pumped up higher, then this would have been a clear demand zone because we consolidated. Finally, we accepted price up higher because there was more demand for the asset than there was supply. So price goes up. If there's more demand, or if there's more demand that there are supply, then you have to raise the price of the asset. So clearly, we had some consolidation in this region, a lot of price action, a lot of candles right here. Okay. We tried to accept above it. We came back down into it, and then we rejected. So now it's overhead supply, and we rejected again. So there's too much supply up here. Too much supply, so price keeps rejecting and coming back down lower. Okay? So more people selling than there are buying. So, yeah. So your hope, your bull case is we front ran this high, just like we front ran this one, and we bottomed right here. And this is the Pico low. This is the bottom. This bottom has to be it. If we're staying bullish, this has to be the bottom. I do not personally believe you can set lower lows than these wicks and still be bullish. If you set lower lows than these wicks again, to me, you're coming way back down into this consolidation. It was a reaccumulation range. Where's the... I should have a range for that. Let's see. I don't see it. This is the range right here. Just this range. So you're coming back down into this range. So you're coming somewhere in here. Price action. I mean, we could do a fixed volume profile. We could even find out. Let's do it like this. I'll show you what I think we come back down into if we lose these lows. We lose those lows. I would say this is the range. So you're coming back down to at least this region right here. So you see how there's naked point of control. Has a lot of price action near it, which makes sense because this is where the most volume came in during this 8-month range. So this was support here. We broke down. You lost the support. You came back up. What happened? So it was support. Then it turned into resistance, right? You rejected off of it. You nuked hard again. So as soon as you lost it, you nuked hard. You rejected, you nuked hard. You finally broke back up through and turned it back into support. Support. Boom. That's where you get the big pump. This is why these fixed volume ranges are so nice, because it shows you where the support's at. So you can use this naked point of control as support. So what I would say is, okay, well, if you lose these lows right here, then you're coming back down at the very least to here. So you're coming back down to 67,000. And maybe you flip that, or you keep that as support here, right? Do something like this. And then if you lose that, well, then you're coming way down. Okay. But that would be your next move. If you lose these lows, you're coming back down to like 67,000. Okay. Turn that back into support. Okay. That's what I'm looking at. So we'll see. Like I said, hold these levels. We can stay bullish. We just got to be cognizant of that trend line reclaim. We have to reclaim that trend line at some point. Has to happen. If we don't reclaim that trend line, we're just going to see us drift down lower. Okay. So I'll throw it on there one more time. Trend line, where's it at? This guy right here. We got to reclaim this. Okay. Reclaiming the trend line, I'm bullish. Okay. ETH on life support, but still alive. Okay. On life support, but still alive. So here's what I'm looking at on ETH. Let's get the fixed volume profile. So here's what I'm seeing on ETH. Let's do fixed range. We'll go from the bear market low to today. Okay. So as you can see, the major demand zone that I have drawn out from the bear market is right here. Okay. So from this consolidation across. So here's what we're looking at. Here's our naked point of control. Here's the major volume. Here was where most buying and selling was taking place, right at $1,600. Okay. Notice how the bottom of this demand zone is where ETH is holding right now. Okay. Let's go into a lower time frame. Okay. This is where you need to start. This is where you get confirmation on what move is taking place. Okay. This could be a deviation, right? Bear trap. Scare people, get them to capitulate, get them to sell down here before making a move back up higher, which is possible. Okay. And I'm hoping so. I'm hoping so. The issue is as you see on the volume, this price nuked down to $1,400 and you get this huge volume to come in to try to save price and catch it and swoop it back up. Okay. Same here. Price nuked down to $1,380. Get a bunch of volume to come in and actually turned it green. So they saved the price again. Okay. So they're trying to save price here. Makes sense why they're trying to save it right here. Why? Well, because if you lose this demand zone that I've had drawn out for weeks now, if you lose this demand zone from the bear market reaccumulation up in here, you're looking at a $1,200 to $1,000 ETH is going to be your next level. Okay. ETH is nuking to $1,000. That just is what it is. And you're going to have to replay it from there. Okay. So what you can do here is you can hedge against downside. And what you should have done this morning, which is what I did. And I was talking about this in the private Discord. Play is gone now though, but I shorted the top of this pump, hedging for more downside. So if we do get another move down on ETH, which is possible, we get that final capitulation down to the bear market lows, you short ETH up in here off of this pump, this news pump, and then look what happens. You get a full retrace as we expected. Full retrace of the pump, and look what we're doing. We're going to try to start attacking these lows again. If we attack these lows on ETH again, you're coming down to $1,000 ETH. That's just what it. That just is what it is. You're getting ETH down to $1,000, $1,100. That's just where you're coming. Okay. This is the last line in the sand before another huge nuke. Okay. This just is what it is. You have to play it that way. These are the levels, so we have to play the levels. If ETH holds here, which again, it can, you just got to watch. If it holds here and we get a good close and we can start to curl back up, okay, we're good. What's the level that we're looking for? This one right here. I see ETH back above $1,800 and a reclaim of this huge macro range. And we're up above $1,800, like right here, this demand zone. Okay. Right up in here. If we can reclaim the range, I'm bullish on ETH again. That's what I'm looking for, $1,800 reclaim. Okay, because the macro range on ETH is this one right here. Between 1756 and $4,100 where we rejected twice. Okay, so you got to reclaim this macro range and this be a deviation of the range. This is a deviation, bear trap, right? Get people to capitulate, bear trap. Reclaim 1,800 on the retest of the bottom of this range. Bang, we're fucking ripping. Okay, that's what we're looking at. But in the meantime, you have to be honest and say, well, ETH does not look good here. Okay, this is the last line in the sand. You cannot lose these lows. You lose these lows, you're seeing $1,000 ETH. Okay, but reclaim of 1,800 in the macro range, love it. Okay, and here's the thing. Some people think that they need to catch the absolute Pico low, absolute Pico top to be able to make money. That's not the idea. You can hedge for downside at these lows and hedge for more downside. And let's say that more downside doesn't come and you end up having to buy back in at 1,800, a little bit higher on ETH. It's okay. It's worth it because it's a hedge. Okay, hedges cost money, but is it a positive ROI move? Is it a positive? What's the word called? EV. Is it a positive expected value? Positive EV play. Even though you're hedging for more downside here, for example, like I am. I'm hedging for downside here just in case. And let's say you get a reclaim and you have to buy back up higher on this $1,800 reclaim, that confirmation that we're bullish again. That's okay, because even though you maybe bought a little bit higher than the absolute Pico low and you lose out on a little bit of profit, that's fine, because just to move back to the range highs on ETH is over a 2x. If you're in beta like the boys club, it's going to be a 6x, a 7x, an 8x on Andy and Wolf, even if you buy back up on this range reclaim instead of buying right here at the Pico lows. That's okay. And if we do rip back to range all-time highs, in my opinion, this will be the third tap of the range high. I think we go to new all-time highs anyways. So, even a $6,000 ETH. Right? Like, that's just what it is. And so, yeah, boo-hoo, you missed, what is that? 25% move on ETH. Okay, it is what it is, but you still get the rest of this move, right? The RR is there. So you could set it up like this. All right, you get long here, and then you just put your stop loss on a loss of this range. Let's say you want to put your stop loss like the naked point of control, something like that. So you long on the reclaim. As long as you don't lose this range low. This is your RR. This range high. That's a fucking banger long. Okay? So that's the way you got to look at it. Okay? Got to zoom out a little bit. It's okay if you miss the Pico low or you buy back up a little bit higher. It's okay. You just need confirmation that we're bullish again. Right? Otherwise, if you never hedge or you never think we can go down lower, what can happen is, well, you do this. You lose these lows, on ETH. You lose these lows on ETH, and then you end up coming down to here. And then you see all this downside without making any money or losing more money, right? That's the idea. You just got to play probabilities. You got to see what makes sense from an RR perspective. But that's what I see on ETH right now. Okay. We've got to reclaim the naked point of control. Have to reclaim this macro range. If we reclaim the naked point of control, reclaim the macro range, I'm feeling bullish. I like that. Okay. All right, gentlemen. Outside of that, I got a meeting here in a couple of minutes, so I'm going to pop out of here. So let me do a little Mr. Producer. We got all them hoes. Yeah, Bobby said, would love a $6,000 ETH after I buy at 1,000. Absolutely. That's what I'm saying. It's in the moment, it always sucks. But 2020 hindsight, you're accumulating at these levels on average as at a whole, whether you accumulate at 1,500 ETH or an $1,800 ETH. It's only a 300-point difference. I know it feels like it's a big difference. It's a big move. But whether you were buying ETH at an 1,800 reconfirmation range reclaim, a little bit higher than 1,500, when ETH is at $6,000, you're not going to really care so much that you were buying at 1,800 or 1,500. Like in the moment, it feels like it's a big difference because you see the difference in P&L. But on a grand scale, if we do get the reclaim and we are super bullish again, even just back up to $4,000, $4,100, whether you were buying at 1,500 average or 1,800 average, you're not pissed. You still made a bunch of money. So you just got to look at what's the risk reward of me bidding right here at the fucking potential Pico low. What's the risk reward of me bidding right now at 1,400, 1,500? If we do get another leg down to 1,000, that's a bigger difference than 15 to 1,800 as 15 to 1,000. Like you're going to lose more money to the downside if you're wrong, as opposed to how much money you would lose if you buy a little bit higher. You see what I'm saying? Like you'll lose more money being wrong here and we go lower than what you would make extra to the upside, if that makes sense. So it's not worth it. Like you'll lose more money if you're wrong as opposed to how much more money you would make being right. You would lose less money on an $1,800 reclaim buy as opposed to what you would lose the other direction, if that makes sense. Okay, that's the way I look at it. So what's the positive EV play? What's EV? Is a positive EV? Right? Same thing in blackjack. If you have 16 and the dealer is showing a 17, right? It's showing a 7 card, excuse me. So you have 16 in blackjack. The dealer shows a 7. Perfect strategy says you're supposed to hit that because over a long enough time frame, that's a higher EV play than you standing on that 6, that 16 that you have. So let's say you have a 16, you say hit because the dealer shows a 7 because that's your better EV play. Dealer deals you a 10, you bust, you lost the hand. In that one instance, yeah, you lost the hand, so quote unquote, that time it was the wrong decision. But from an EV perspective, from a best case scenario perspective, you made the correct play. You made the more profitable play. So it's still the right decision. Does that make sense? So it's like there's a difference between making the right decision and what in the moment was actually the correct option, if that makes sense. You see what I'm saying? Like you're supposed to be making the correct decision on a long enough time frame so that over time you're making money. Like what's the positive EV play? 16 versus dealer showing a 7, that's a hit. Even if you bust, that was still the correct play. So that's the play that you make. Do you see what I'm saying? So you make the correct decision on a long enough time frame, you'll be profitable. So, all right, Mr. Producer, we got all them hoes. Let's see. No, live scene. But boom, boom, boom. All right, if you're not on our side of the Discord, get in there. Let's start making some money. That's position for you for this next move. Tariffs should be coming off the table. Hopefully within the next couple of weeks. So we'll see where we're at with the markets. Link is in the description. Link is in my bio, whether you're watching from X, watching from YouTube, watching from Kick, Twitch. We got people all across all platforms watching right now. The website is thetaylorscode.com. Join as a professional. Join as a gentleman. Join as a hero. Whatever package you decide, you'll get different options in terms of what you'll have access to in the Discord. If you want to actually have access to myself, my portfolio, my positioning, what I'm doing on a day-to-day basis, what I'm buying, what I'm selling, etc., one-on-one calls, video calls, so we can go over charts, teach you TA, go over your portfolio, help you position, anything like that. You want access to the private crypto plays portion of the Discord, make sure you sign up as a gentleman. It'll be the gentleman on the website. If you just want access to the private Discord in general, the network, all the private chats that we have, the networking that you can do, etc., just join as a professional. Be able to get in there, get some juice, work with e-commerce, work with fitness, work with crypto, etc., whatever it may be, do that as well. But I'll see you guys inside the Discord. We'll send you the link as soon as we see you join. And yeah, let's make some money. All right, lots of volatility. There's money to be made on volatility as long as you understand how to position yourself correctly. We want some long exposure. We want some short exposure. If there's more downside, we want to make money. If there's upside, we want to make money. So we just got to make sure we're positioned for that. All right. Naeem, I will not be sending back your honeys. I told you already. Okay, so quit texting me. The Bangladeshi Hans stay with me.